guys, thanks for joining us here again at the Owner Finance Network and one of our short legal videos. We're here to talk to you today a little bit about issues that investors have when they're selling homes to home buyers. Again, with me is one of our attorneys from Horne & Associates, Tina Hill. Again, welcome, Tina.
Thanks.
So let's get right back into this. I know again, you know, earlier in our video about sellers, buying a house from a seller, we talked about investors, again, not understanding information properly, right?
Right.
They have gone online and read something on the internet. Of course, again, we know everything on the internet is true, right? We know that they will talk to their neighbors or a realtor down the street, and they get this information and think that's all right. And again, it's frustrating for us because we see all this and then we have to undo what they think they know is right, right?
Right.
So when an investor owns a home, you know, maybe they've owned it for years and they just want to sell it to a buyer. Maybe they've owned it and it's been a rental property for years and they want to convert it into some type of a seller finance transaction. Or maybe they just bought it last week and they're now marketing it and selling it to a back-end home buyer. So there's a myriad of things that we come across and we see out there. So when that investor is trying to sell that house, you know, they have the opportunity to sell it in many ways. What are some of the ways that they can sell it to that back-end home buyer?
Well, they can just do a simple owner finance note and deed of trust where there's no underlying debt. Maybe they have a mortgage with the bank and they can do a wrap transaction to their back-end buyer. Or they can sell it subject to, maybe they just want to walk away and get out of the transaction, take a down payment, and they can do the subject to transaction.
No, so I think there's lots of ways, right?
Correct.
You know, I've come across some deals out there where the investor has put a house under contract subject to the existing debt, and they don't know what to do with it because maybe they have a 10% first lien interest rate and a 12% second lien. Maybe the house is in really poor condition, or maybe it's not too desirous in the neighborhood, and they really don't want to get involved in this thing for the next 15, 20, 30 years, right?
Right.
And so when I see that, it's like, guys, you have easy solutions. You know, you don't have to take it down and own it. You can, assign your contract to a back-end buyer. Just make sure you do that the right way. And just like the disclosures we have between our seller and us as an investor, we want to make sure our home buyer gets the same disclosures. Maybe they want to allow the home buyer to buy the home, like you said, subject to the existing debt, right?
Right.
Where it can be, they simply agree that the buyer pay the mortgage payment direct, they get that down payment. Fantastic. But I like that because over the assignment, because at least they're still in the middle of the deal. So if the home buyer fails to perform, at least the investor is able to take the deal back and reload it to help protect the back-end home seller, right?
Correct.
And then the wrap mortgage, of course, is the easiest whenever there's an existing mortgage out there. Now, one thing I like to do is whenever there is a debt-free scenario, and I get a lot of investors who own homes debt-free, and they want to sell it to a back-end buyer, and I'm going, that's great, but I really like them to put some type of a mortgage on it. Now, the first thing I like to tell investors is never sell a home out of your personal name. Put it in some type of a corporate entity, right? Whether it's a corporation, an LLC, a limited partnership, whatever it might be. But then you can do a loan from yourself to your entity. And I say that, guys, because down the road you may want to borrow money on that property, and using that underlying first lien you created, you can at least get a title policy on it in the future, and you can assign it to your financing entity or your private lender, as opposed to taking that consumer loan and trying to do it. Always remember that banks like commercial loans. They don't like consumer loans. That's an ease of operation out there a little bit. Another thing I see, Tina, is I see a lot of investors come in. Maybe they're selling their home. They're asking for a $20,000 down payment. They got this great buyer on the hook, but they've only got $15,000. You know, they need another $5,000 down payment. They got some closing costs, maybe $2,500, $3,000 total. What do they do in that case?
Well, our office recommends that they do a second lien. Maybe make it short term, 2 or 3 years. Make the payment due either monthly or maybe around tax time when they're getting their tax refund, have a lump sum payment. And that's an easy way to recoup those down payment funds or closing costs.
Yeah, and then whether you do it month to month, right? Or maybe once a year at tax time, as you said, either way is great, but there's always an option. And of course, I like to get the money now, get my property occupied so it's now income producing, less risk of vandalism out there sometimes as well. And if every time my house sits vacant for a month, I'm losing 1%. And so the faster I can get it sold, of course, the less loss I get along the way. Let's go a minute just about executing the contract between the seller investor and the back-end home buyer. Now, just like with buying houses, I see so many investors, again, they just mess up. You know, sometimes instead of closing at a law firm, they're going to a title company. And again, the issue is title insurance really going to be issued, and do you need it or not? One of the things I like to talk to investors about is, do you really need title insurance? Do I, as an investor who's selling my home, do I need a mortgagee's title policy, a lender's policy? I don't, because I already know what I've got, right?
Right.
But does the buyer want one? And it's one of my positions is I don't ever want to dissuade a buyer from getting it. How do you explain that to an investor or a buyer when those situations arise?
Well, a lot of times, especially if your buyer's planning on refinancing in, say, a year, 2 years, 3 years, they're going to have to buy a new policy anyway for their new lender. And so we tell them, hey, you can save your money and just close with either an abstract or a title run. That's an easy answer when it comes to your buyer.
No, it is. You know, and one of the things I look at also is that, you know, when we as an investor, and I keep pointing to myself because I am an investor as well, are selling a home, if I'm only getting 10% down and I'm not getting 100%, I am not going to purchase a title policy and pay for it on behalf of that buyer. I don't care if they get one themselves and pay for it, but I'm not going to do it for that reason. Now, I found also that when you talk to a realtor in that context, they will usually understand that as well. But so often title insurance is not issued. But in the realtor world, they think every deal has to have title insurance. And in the owner finance world, that's really not true, is it?
That's right. It's not.
So as we go through this, you know, again, I want to make sure we get deals in. I want to get all of our paperwork delivered to us, you know, on time. And I like to get it all at once, not in piecemeal. What other issues have you come across out there with investors, especially regarding our disclosure packages that we try to provide to them?
Well, I mean, I'm at loss.
Stop. That's where the investor doesn't understand what they are.
Dun, dun, dun.
Okay?
Okay.
They don't understand, they've never read them, they don't know how to explain to the borrowers, and what every investor should do is stop and just take a moment and read them one time. Really, you should read them a lot of times, not one time, so you understand them.
Okay.
Okay, so we're going to do that, and then we're going to go into, you're going to ask me about, so
Yes.
as we go through this, what comes first? Okay? Ready?
Wait, can I say something first? You ask him some questions.
That's what I'm about to do.
Okay.
I keep trying to. She has to open her mouth.
But you talk too much, so.
Yeah.
You let her ask the question. I saw that.
She has a beautiful smile. We were number one. Wow.
This is all going in the video.
Okay, this is in the bloopers. Ready? 3, 2, 1.
So Tina, what else do you see out there investors do, you know, especially, you know, regarding disclosures that they need to understand?
Well, a lot of times the investors don't understand what the disclosures say. They don't know how to explain them. So it's very wise to at least read through the disclosure package and know what you're disclosing to your buyer.
You know, so yeah, they should read it, right?
Right.
Not just once, but I think you need to read it many times to actually understand it. And these disclosures, guys, we try to provide to the marketplace and our clients, these are in layman terms. They are simple to go through and easy to read. They're easy to explain, but you need the basic understanding to make sure you explain things to your buyer properly, it will make you come across as a much better investor at the end of the day.
Scott, tell me this, when you have a seller that's getting ready, to get their contract and their disclosure package and everything together, what order does things go in? Like, I see the sellers make so many mistakes doing that.
No, they do. And the problem is everybody has an opinion, right?
Right.
If you go talk to an RMLO, a residential mortgage loan originator, they want to tell you, process the buyer first. Why? I'm not sure they want to buy the house yet. And in the traditional world, if they want to go out and get pre-qualified, great. But you go to contract first. You get earnest money, you tie up the deal, you get a legitimate thing, then you go. So where I start with is sign the contract. Get that earnest money, because earnest money can become non-refundable if the buyer elects to pull out of the deal. If there is a time frame that is required, such as here in Texas, we must give the buyer the Texas underlying lien disclosure notice at least 7 days prior to closing. I want that time frame to start running immediately, because once that time frame has run, then the earnest money becomes non-refundable unless the borrower can't qualify. Well, once we sign the contract, they can go talk to the RMLO the next day. They can go online, and if they're proactive enough, they can get this information provided quickly. And so within a matter of a couple of 3 or 4 days, we can have the full RMLO package to be looking at. So it's contract, earnest money, make sure all disclosures are signed to start time frames, then go to the RMLO out there. Now, once you've done all of this, as we always recommend, using a loan servicer, right? A third-party loan servicer. Go online to that loan servicer, get their application package, get it filled out in advance so it's ready to go before closing. Don't do it after closing, do it before. Then look at the insurance. We like to see buyers providing new 1-year prepaid policies. It's more traditional for the marketplace out there. And so get a copy of the insurance binder. Make sure the proper loss payee clauses are on there. If there is an existing mortgage, make sure they're listed as the primary loss payee, that you as the investor are listed as the secondary loss payee. So this is a pecking order. And when you do that, you go to closing, you get a great smooth closing, and you're on your way to making money out there a little bit. So I think that to be pretty nice.
All right, well, explain this to me. What happens when you have your seller/investor and they get their RMLO package? What do they need to be looking for?
Well, I think investors have to know how to read a package. They need to look at, when you get an RMLO package today, there's 1 or 2 pages where all the information is contained. Behind it, of course, is all the backup data, the 1003 application, tax return, rental and employment verifications, things of that nature that can just bore you to death. But you need to be able to look at that front page and look at the things that are important, things such as debt to income ratio. How much money does my borrower really make? What are their expenses? Can they afford our home or not? And these are the important things that I think we have to consider. If you don't understand how to read it, take a moment, call the RMLO, let them help walk you through it as well. And so the basic processes that are out there, learn how to read the package and be smart. Knowledge is power, right? At the end of the day. Once you get through all that, I guess the last thing here is I still see investors, when they're talking to the borrowers, they're not asking enough questions. They're not determining if they're single or married, divorced, whatever it might be. What do you see out there?
The same thing. They don't know who's buying the property. You may have a buyer, they only want one person on title, but they might be a husband and wife, and if you're in a state like Texas, the husband and wife, actually, no matter who's on title, both have rights to the property. Maybe you have minors that they want to add to title to the property that can cause all kinds of problems. I mean, there can be numerous other issues as well.
There are, but I see so often, especially in the Hispanic community, for instance, where the husband wants to sign the note and wants to be on the deed, but not the wife, but they're married. And of course, here in Texas, as a homestead state, the wife has to be on the deed of trust. But what they don't understand is if they're married and only one person's on the deed, they still both own it 50% no matter what you do.
Right.
And then I really don't like it when they want to add, son and daughter, even though they may be of age. It's just more complication that doesn't need to be had out there. So guys, learn how to talk to your buyers. Learn how to ask questions. Understand the RMLO process, and make sure you know how to fill out your paperwork and explain things to your buyers as well as possible. It'll make you a much better investor. Thanks again, Tina. We'll see you again.